is up, everybody? Are you ready for some ASMR? We're going to be talking about stop losses with ASMR today.
Okay, so this video is going to be about stop losses. This is going to be episode 15 of the free course, and stop losses are very simple. It's very effective to use them. It just, you type it into whatever, you drag it, you type it in, say you want to have a 30 tick stop loss, and you only want to risk $500, so you calculate it all up, how many contracts or lots. You bring your stop loss to here, say you calculated it all up, $500. So if it comes up to here, you're gonna get stopped out. You're gonna lose $500. You're no longer confident in this trade. Um, for me, I don't always use hard stop losses, which means if it comes to here, I'm not gonna get stopped out unless I click an X or close position, whatever it may be on different platforms. So I let it range between a little bit so it doesn't just come up, wick me out like it could have on Friday. I'll show you an example. Right here came up to about my standard stop that I use most of the time is 30 ticks, and I didn't have a hard stop, so it came up to about 44 ticks. um, so if it would have closed up there on the 5 minute, I would have lost more than I would have liked to, but I was very confident in this trade going down. I'm not going to get into this trade breakdown or anything like that, but this is just about stop losses. So you can have a standard stop loss, which you've looked and seen from previous data, back testing that, okay, with my strategy, 30 ticks works for me. I see most of the time, because I'm a scalper, I like to have a tight stop, and I like to go for nice, good risk to reward. So on Friday, I hit a nice 1 to 3 risk to reward. 30 tick stop loss, 90 tick take profit. Okay. So basically, since I'm a scalper, I like to have a tight stop, and I've noticed that 30 ticks is a perfect amount. Not everybody's a scalper on a short time frame like the 5 and the 15. Some people trade for longer times. They're looking at the 30, they're looking at the hourly, and they don't have a set stop loss. They have it's different every single trade. Say they were looking to short right here after it came up and filled this little imbalance. They could have had their stop above the highs. There's a bunch of different ways you can use your stop loss. You can have your set stop loss, or you can have a different stop loss depending on where you are in the market. Let's say you wanted to, this isn't the best example, but let me clear this. Let's say, let me find a better example for you guys. Okay, so let's say you were trading smart money concepts. We came up, swept out this buy side liquidity. We pushed down, created an imbalance, blah, blah, blah. We did inverse it, but let's just say we didn't. Say after tapped into it, you shorted it, had your stop loss above that buy side liquidity. So you would, if it were to come back up, it'd stop you out there. Okay, boom, you enter here, stop loss above there. You target these sell side liquidity, whatnot, or the middle of this fair value gap, whatever. I don't trade that. I used to, but stop losses are very, very simple. This is a very short video, just going on about why to use them and why it will prevent you from losing more money than you want to lose. So if you were in this trade, let's say you wanted to take a long right here, okay? Let's say you entered here, you wanted your stop loss right here, and it came down, stopped you out, and this is the point where you said, okay, if this stops me out here, it could potentially start going to the downside. If you don't have a stop loss and you're just betting on the fact it's going to go up, and you will have right here is a $500 risk amount, and it just keeps on going down and down and down and down. Now you're losing $2,000 instead of 500. So it helps you minimize your losses and keep your risk management in check. So that's basically what I want to come on and talk about with you guys. But this next video is going to be about take profits. So peace.